What's going on, guys? Welcome back to our YouTube channel. In today's video, I'm going to be breaking down our trades that were taken this week, including the analysis and the reasonings behind the entries. As well as taking these trades ourselves, they were also sent into the Discord group for our members to take advantage of. This week consisted of 8 trades and totaling at a plus 14 risk to reward. So I hope you enjoy this video. Right guys, so let's get straight into it. To start with, we're just going to talk about the USD JPY pairs, and then we'll go on to talk about the Euro USD trades and then the GJ trade. So it consisted of 5 USD JPY trades, 2 Euro USD trades, and then 1 GJ trade as well. So we'll start on the UJ trades and then we'll move over. It will save us a lot of time. So the first trade was actually this USD JPY sell. Now this trade was broken down in the previous YouTube video, so if you want to look at that one, make sure you go back and watch that video as well. I'm not going to go over it again, but that's the first trade of the week was this UJ sell, and it was for a +6 risk to reward ratio. So that was for a +6 risk to reward ratio. So already to start the week, we're up for a +6 risk to reward. And then basically what we went on to do was to do this USD JPY buy. So what I'll do is I'll ping, as always, this the signal that was sent into the signal group for our members to take advantage of. And then we'll just go down and we'll break down the analysis behind it and the reasons for the entry. So the reason for this entry, if we look at USD JPY, of course we are uptrending on the long term. If we just zoom out here, you can see we're definitely uptrending. So we're looking to kind of capitalize on as many buy positions as possible, because we know the probability is for these buy positions and we know that's where we can take advantage of it. So we're looking for just some reasonings for our entries. Now, the London Open came and we had just reacted off of this like big support in the market through here. If I just do this level here, about 129.8, we'd come down to that level here and we reacted off it. That was in the middle of the night, so we woke up and we had seen that reaction had happened. And what I can start to kind of look at and what we started to see was a potential inverse head and shoulders being created. If I was to draw this support level through here, we can potentially say that this side here is the left shoulder, this is the head, and we made this right shoulder here. And then of course this could be the neckline through here. And so basically what we're predicting is for this bullish reversal pattern to come into play. We're anticipating for buyers to step into the market at London Open, because they've previously seen what's happened. We've seen this bullish impulsive move and now we're seeing a correction. So what actually made us get into this market was we actually waited and we saw a stop hunt happen, and then we allowed the market to basically come to us. So we knew this was happening. We saw this inverse head and shoulders. We knew people were buying at this level in the market here and here. So there's people buying here and there's also people buying here. We can see the wick rejections. So that's enticing buyers to step into the market. We then saw a stop hunt take place. So this here to us is a stop hunt, and it pulled back and it's still making this higher low in the market. And then what happened there was we saw another impulsive move come back into play, back above the shoulder line. So we're pushed back above. It's basically just a stop hunt. It's come back, and then we saw this tiny correction, and that's where we entered the market here. So you can probably see already this was a loss. So this was a -1 risk to reward loss in the market. But it's just unfortunate, as you can see, the market just come back down again and stopped us out. So we got stopped out of that, but of course you can see the market did begin to head in our direction, and at this level here we probably would have gone to break even. That's almost a 1 to 2. So we might have break even our trade and to avoid the loss, but it is what it is. We've got to take it on the chin. And if anything, it wasn't actually ready for the impulsive move. As we'll go on to the next trade, is where we made it back and we actually saw the impulsive move that we were looking for. So that's the first trade of the week. That was the -1 risk to reward. So we took the +6, we took the -1, so we're at a total still of +5 for the week. Now moving on to the next trade, what happened here? Again, we're looking at rebounds and rejections of strong levels within the market. So again, if I was to look at this level here where we previously entered the market, you can see here where we previously caught this, I believe it was like a 1 to 6 or 1 to 4.5. So previously in the market where we caught the 1 to 4.5, the same level, even so, I can just expand this zone in the market here. I can just expand that all the way over, and you can see that we have rejected it again. the following day. So this is now the 11th. It's just after London Open, coming towards the London-New York crossover. And what we're doing is we've seen a rejection off this level. We've seen a nice impulsive move into here, followed by a rejection, followed by a small pullback, and that's where we look to enter the market. So we're looking at entering the market just before when the volume kicks in, because we want to be involved just before, so then when the volume kicks in, we can capitalize on it. And as you can see, that's exactly what happened. So I'll put the signal up here. This is the signal that was sent into the group with the exact entry, stop loss, and take profit. And as you can see, we gained a +3 risk to reward on it. It did go higher, it went to a +5, but the +3 for us was perfect. It was enough, and we didn't want to be too greedy. Before we actually sent the signal, we did actually think about aiming for this, which was a 1 to 4, but we did see this small resistance level in the market here, where we just wanted to be happy with our 1 to 3, and that's what we've done. So yeah, that's the +3 risk to reward. So we're +6 -1 5 plus another 3, so we're now +8. Just looking at Euro USD JPY. Moving on. So we've now got another USD JPY buy. So we're looking at, again, rejections off of strong supports in the market. So now this is like a major one. This is like where we're actually thinking this is a strong support in the market. So we come down to here. We've seen this rejection. We're seeing the slowdown in momentum now. The slowdown in momentum is really what's telling us that profits are being taken at this level. So at this level, sellers are taking their profits, and buyers are looking now to enter the market. So that's what's going on here. So we entered the market early morning, I believe, yeah, 10:30, around 10:30. I'll put the signal in here now so you guys can see that. We looked to enter the market around here, and with this one, we did go into quite a bit of profit. So this was a +3 risk to reward target. However, once we reach the 1 to 1, most of the time we'll move our stop loss to break even, but for this one we didn't do so, because the only reason being is because it was very, very choppy. And I believed and we believe at Hands3Trading that if we was to move our stop loss to break even, it's too early to do so because of how the market's moving. When we look at the market and we want to break even our trade, we want to break even it when there's momentum driving price away from break even. If it's hit our 1 to 1 with choppy movement, then we know price could easily just correct back to our break even, stop us out, and then continue. So we only really like to break even the trade once it's impulsively moved away from our entry. So as you can see here, it hasn't really impulsively moved away, so we didn't break even. But of course, it was this was actually wrong, is a bad thing to do, and it hit our stop loss. But again, it is what it is. We take a -1 loss from that. So yeah, I put a signal up so you can see. Full transparency, we could have easily said that no, we could have got out of break even, but no, this was a loss, so we'll take that on the chin. +7 now, not +8. We took a -1, but again, we're still up very healthily for the week. Now, the last USD JPY trade that was taken on Friday, a great trade, in fact, that was taken. The analysis behind that. So let's take a look at this. If I was to just expand this zone and look at just what price is doing, you can see here, so from this stop loss that we took, it looked like price had impulsed away and sellers are taking control of the market. That's what it looks like has happened. It looks like sellers have stepped in and we've now corrected. So we can say that this is potentially a correction and we're going to see a continuation to the downside. So one thing I want you to notice is this right here. And I want you guys to start looking at it a lot, because it does happen a lot in the market. So price is corrected, price has come back to retest this zone and use it, which was previously being used as support. It's come back and used it as resistance. Take a look at this candle right here. So we've come back and we formed this massive bearish candle, an engulfing bearish candle, as the textbooks likes to say. There will be a lot of people out there who thinks that is the perfect place to enter a sell position. There's a lot of people who will be entering that like so, putting their stops just above, And as you can see, they would not see an inch of profit. They would not see an inch of profit straight to stop loss. That right there, to me, is a retail trap. That's just a perfect retail trap in the market to entice people to enter the market, for then buyers to step in and gain their original position. As you can see, straight away, we've now turned bullish. And what have we done? So we've gone back to our original bias, where we've now impulsed to the upside, and we've done the opposite. So now this was the impulse to the downside followed by a bullish correction. This is now impulse to the upside followed by a bearish correction. And this is where our analysis was on this trade here. So what can we see? We saw the correction. However, we didn't enter down here purely because it was just too early to enter the market. It was 8 in the morning. It's a bit too early. We like to wait for later on in the London session, crossover into New York. So if we were to just draw something like this, we can see that it's forming this corrective structure. Just vaguely draw something like that. And we can see that this candle here broke away from that. So we've broken away now from the bearish correction, and we're looking at entering in the market. So what we did was, this candle was our kind of confirmation of a breakout to the upside. And then we waited for a pullback, and we entered right here, literally on this wick rejection here. So that's where we entered the market, on that candle there. And as you can see, not much drawdown whatsoever. Put the signal up here just so you guys can see full transparency where we entered the market. So yeah, we didn't see nothing. We didn't see no drawdown, straight into profit, trailing our stop loss to break even once we hit a 1-to-1 here. Didn't come back down, didn't tap us out, continued all the way up. Now this was original target of a 1 to 4.5. Do I believe we're still going to hit that? I do. However, with it being a Friday, with us being up for the week, with us not wanting to just watch the trade position, we actually closed the position at 1 to 3. Because as you can see, the momentum here, if I just draw a box around this price action, there's no momentum in the market, there's no activity, people have closed their positions out for the week. We're not going to see this hit take profit on Friday. Do we want to carry the position over onto a Monday and with spreads and swap and just, or would we rather just bank our profits and call it a week, call it a day, and enjoy the week and enjoy the rest of the Friday? So that's exactly what I said that we was doing, is we were closing our positions here, as you can see in the signal that was sent. So that was that position there. On USD JPY, we closed for a 1 to 3. Great trade. So for the total for UJ was +6, -1, +3. So that's 5. That's 8. -1 is 7. +3. So we actually totaled for a +10 risk to reward on USD JPY. So just from your USD JPY, if you would have risked 1%, you would have profited 10%. If you risked 2%, you would have profited 20%. If you would have risked 0.5%, you would have profited 5%. So that's just with USD JPY. Let's now move on and look at our Euro USD trades, sorry. So there was 2 trades taken on this one. It was a sell for a +1 and a sell for a +3. So we actually done really well on Euro USD. So this was the first one. This was the sell. So we'll ping it up here. We'll ping the exact entry and the exact stop loss and take profit on this one. So our targets, I believe, was a 1 to 3 on this, or maybe a 1 to 4. I'm not sure, but basically what actually happened was we got out for a 1 to 1, so I'll put that in there just for that. Okay, cool. So analysis behind this one. So we saw the momentum on Euro USD was slowing down. You can see here. This is like our resistance. We've come into here. We're making these higher highs and higher lows. So this is like the higher low, the higher high, the higher low, higher high. But now we've come into this resistance. We've pulled back. We've made this higher low. However, we haven't seen price come into here and form this higher high. So we're starting to see this switch in momentum, a change in activity basically is what's going on. And rather than creating a higher high, we actually saw this rejection and we formed a lower high. And then what happened? We're holding this higher low, we're holding this higher low, we're holding it, and now prices again is still forming these lower highs, and what price is doing now is it's squeezing, and we're now sitting and we're waiting for what's going to happen next. Are we going to break to the upside? Are we going to break to the downside? We're sitting back and we're waiting for that to happen, and then we can react. So we're not trying to jump into the market and gamble, oh, I think it's going to go, I think it's going to go down. No, let's wait for evidence and let's react. Got to be reactive, not proactive. So we've got our confirmation. Price forms this lower low in the market, and that's our confirmation. And then what we're doing is we're allowing price to pull back, and then we enter on the pullback, which, as you can see, is what we did. Now this is where stop loss placement is really important as well. As you can see, we entered here, we put stops above most recent lower high. So yeah, we went into a little bit of profit. We didn't reach our 1-to-1 yet. We pulled back, almost got stopped out. So that's, again, people say stop losses, oh, your trade went into stop loss, almost hit stop loss, but and then it went to profit. Oh, that's not a good trade. It is a good trade, because that's what stop losses are there for. Stop losses are there to allow you to be wrong a little bit. So, oh, I was wrong a little bit, but you've got a certain level where you're out of the market if you're too wrong. So with this, you can see it's a perfect stop loss. It's a perfect trade, because we put our stop loss in a position to allow price, if it wanted to come up to that level, which it did. As you can see, it just needed to grab some more liquidity at this level in the market here. That's just what needed to happen. And then that's when the momentum kicked in. Because right here, it's very choppy still. As you can see, it's a very corrective market. Price right there. Anyone who would have had their stop losses just above here would have got stopped out. But you need to have your stop loss in a safe position to allow something like this to happen, as you can see. And then the momentum kicked in, as you can see from these two bearish candles. The momentum kicked in. And once we reached this 1-to-2 and we was floating and we saw this choppy movement, for some reason in the market, the momentum was slowing down. I believe it was because of the time of the day, the sessions are over. We actually trailed our stop loss to a 1-to-1, to around here. And as you can see, boom, 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 we pulled all the way back and we got stopped out at a 1-to-1, which is a good thing, because as you can see, if we would have moved it to break even, it would have been break even. And if we would have moved it, or if you can see there, we actually, I don't know if we would have got stopped out if I was to drag this all the way across, potentially because of spread, but technically no, we wouldn't have got stopped out. And then that would have gone all the way down here and probably would have hit our take profit. But there's no shoulda, woulda, coulda in this industry. It is what it is. We'll take the +1 risk to reward on Euro USD. So on Euro USD, we're +1 at the moment. Next trade on Euro USD was a sell. So this one. This is a very technical trade, and there's a lot of reasonings behind it, because, and we'll talk about it now. So Euro USD, very bearish on this day. We're waking up and we're just seeing every single low be taken out lows, a little bit of wicks to the downside, taking it out, a little bit of wicks, taking it out. So we're just going with the trend. The trend is your friend, remember that, guys. When the market is moving like this, you just want to be hopping on as many high lows or lower highs as possible. Every swing you want to kind of be trying to maximize on it, and that's what we was doing on this day, is we was trying to maximize on that. So I'll put the signal up again so you guys can see the entry that we got in on. So all we was literally doing with this one, guys, is going with the lows, going with the swings, basically, as you can see here, going with the swings, making lower highs, again making lower highs, and that's the reasoning for this entry here. It's this pullback, but it's the trade management which I want to focus on this trade here, because as you can see, there was a lot of choppiness in this market. So this is where we entered. Again, there was hardly any drawdown on this trade. So we entered on here and we saw this big impulse away. Now, originally, as you can see, we did reject this level in the market here. So there's two ways you can take this. You can take this as, oh, we've made a double bottom in the market, we're going to turn bullish. Or you can take it as, okay, we've created this double bottom, there's people buying this market now. However, with how bearish Euro USD is, I believe this is just creating liquidity below, just for it to be broken, and for this liquidity and this stop hunt to be taken out. I hope that makes sense. So we've created this liquidity. Previously, you can see we've made, even here, that could be a double bottom. It just gets taken out. So this, to me, is just a double bottom that looks like it's going to get taken out to me. So what actually happened after this, we formed this correction back up to break even. So even if we did break even the trade, and we got stopped out of break even, there would have been a high possibility, well, in fact, we would have entered a trade again. As you can see, we reacted against this support, we formed this correction. If we did literally just get stopped out of break even, we probably would have entered the market again anyway. So there's no point actually break even in the trade. Just keep the position, remain in the position, and that's what we've done. So we remained in the position, and as you can see, we broke out. We completely broke this low. And again, what happened here is we broke this low, and look how close that was to our take profit. So we were a couple pips away from the take profit. Not looking at the, we've got the alert set at this take profit level here. So we're not actually looking at the trade. And as you can see, all we did was we've broken this now, we've pulled back, we've retested this support here as resistance, and we smashed take profit. So that was that trade. So that was a bit of a management trade there. So once price had hit this level, we'd have our alert set, and then we were thinking, do we break even a trade? And then we come to the conclusion that there's a very high possibility that we could pull back to this level and then continue. So we're still bearish on this pair. So we don't think price is going to turn bullish, and we're still heavily bearish. So there's no need to break even the trade. So yeah, that was Euro USD. So we actually were +4 on Euro USD. So that's that one. Next trade is just one. Last trade is a GJ trade, which we'll talk about just quickly. Jump to the 15 again. Okay, so this trade was a break-even trade. Got to talk about it. So this is GJ is very choppy, and if I'm honest, we kind of went against our own analysis on this. So to me, I'm not actually happy with this trade. To us, we're not very happy with what happened. So if you remember our GJ analysis, we were expecting what happened to happen. So we formed this double bottom on the higher time frames, and we were expecting it to be broken because it provided liquidity below it. So that is what actually happened. So we knew that price was going to move bearish. So this is something that we actually have to go away and look at. So sometimes losses are a mistake. So we're actually lucky this wasn't a loss. This was a break even, but in our eyes, this is still a loss because we went against our analysis. But we'll break down the analysis anyway. So we pretty much just saw this support in the market here be broken, creating, collecting liquidity, at this support here, just on London Open, and then we entered the market. So because we went against our analysis and because the market was heavily bearish, we quickly moved our stop loss to break even at a 1-to-1. But as you can see, it was hit pretty much straight away. To be honest, even though it was hit, it was against our analysis. Like you can see, we got stopped out, and then pretty much price went straight up, and it would have hit our take profit anyway. However, it is still against our analysis. We knew price was going to do this bearish move, so we shouldn't have taken a trade. So all about transparency, guys, all about understanding and transparency with yourself. So some trades are losses in the fact that they have to be embraced and you can't avoid certain losses. But for example, this trade here, even though it was a break even, it shouldn't have been taken because it goes against our higher time frame analysis, which is very important. Higher time frame analysis is good to understand the overall direction of the market and understand where the market is heading in the long term. And then you use that to go down onto lower time frames and then basically go with that analysis. So if you've got a higher time frame buy bias, you can then look to capitalize on the lower time frames, on the 15, on the 5 minute, on the 30 minutes into buy positions. Okay guys, so I hope that video helped and I hope you took something valuable away from it. If you have any questions or if you want to get involved in the group, do not hesitate to hit us up on Instagram. I'll put both our Instagrams on here now, as well as our business page, Hands3Trading. Feel free to also drop us an email on Hands3Trading hands3trading@gmail.com. We also have a new quantitative trading system, completely hands-free, which if you want to get involved in, you can. Remember guys, we're now operating under a FCA regulated environment. So if you have any questions on that, don't hesitate to hit us up. But other than that, until next time guys.